Welcome back to Yahoo Finance Live, everyone. Wingstop feeling the heat after the fast food chain saw cost increases impact their results in the first quarter. The stock moving lower over the past 2 days by about 5.7%. And we're continuing to watch them here on the day, actually higher over the past 2 days by about 5.7%, but here lower today by about 2.9%. Companies seeing a silver lining as deflation in wing prices starts to take effect. Joining us now to discuss is Wingstop CEO and President Michael Skipworth. Mike, thanks for taking the time here with us today. System-wide sales in this most recent quarter, they actually increased 12.7%, but the net income comparatively was down. What particularly should we make of these numbers?
Yeah, I think the thing to focus on, Brad, with Wingstop is we're in a really unique spot where other brands are having to navigate inflation right now and worry about pressure on their margins. And we're actually in a very different position where we're benefiting from meaningful deflation in our business. And as the consumer navigates some of this inflation, we're actually able to give some of that deflation back in the form of value and able to continue to drive our business and retain those occasions with these guests.
Yeah, Michael, the pullback in wing prices has been quite significant. So let me just stay on that. So are you cutting wing prices?
We are not, Brian, but what I'll tell you is it's translating to really strong cash flows for our brand partners, our franchisees who have enjoyed top line growth over the last 3 years in excess of 30%. And so our AUVs sit at $1.6 million, and our franchisees are generating cash flows that are enough to pay back an investment for a new Wingstop in less than 2 years. And so that gives us a lot of confidence around unit development, which is why we came out and raised our target for this year to open over 220 restaurants.
You know, as a new CEO, and you just took over, but you've been at the company for close to 8 years. How would you compare what we're seeing with consumers today compared to when you first started? Do you see them concerned, trading down the menu, purchasing fewer wings?
Yeah, we've definitely seen events like this happen over the years, and we know the playbook to deploy is to lean into value, and our menu allows us the ability to do that. And that value occasion really resonates with guests because you see guests as they navigate an inflationary environment like we have today are more likely to pull back on those QSR visits of 4 to 5 times a week. But our average frequency is actually once a month or 3 times a quarter. And so we find guests will save up and then splurge or indulge on that Wingstop occasion. And we're able to retain those occasions by making sure we lean into and offer value to that value-sensitive consumer.
Hey, Michael, it's Julie here. So if wing prices are trending downward, and if indeed we have seen the peak of inflation in other areas, that implies your margins have room to expand substantially this year, no? Unless you guys do start to cut back on prices.
That's exactly right, Julie. We're looking at really strong four-wall cash flows for our restaurants. And again, that's really what's fueling another year for record development for Wingstop as we increased our unit outlook to over 220 restaurants this year, which would represent a growth rate of over 12.5%.
Digital sales, 62.3% of sales in this most recent quarter. I mean, when you think about the allegiance that a lot of customers are having to a digital purchasing experience, that also allows you to streamline much of the fulfillment process. I mean, do you look across robotics and say, okay, do we need as many physical locations or employees if we can just rely on a Flippy?
Yeah, the unique thing about Wingstop is the way we innovate is really around flavor, and our box is efficient already. On average, a little bit less than 1,700 square feet. You can operate a Wingstop with 3 team members in the restaurant and generate $1.6 million AUVs and really strong cash flows. And so where we lean in around innovation is on the digital side of our business, where you did mention we have over 60% of our sales coming in through digital channels, and we have a stated vision of digitizing every one of our transactions. So we'll continue to innovate and find more ways to capture some of those non-digital occasions and convert them into digital, where we enjoy a $5 higher average check on those digital transactions.
You know, just following up on Brad's point, Michael, we've started to see fast food, Chipotle, White Castle too, actually just put these physical robots in the stores. I'm not saying you're going to replace all your workers, but your cook time or how you prepare your items is in fact pretty simple. Do you see yourself bringing these robotics into your restaurants?
It's something we can monitor over the years and look at as the technology evolves. But today we don't have any immediate plans to introduce robotics in our restaurants because the unit economics are strong, the returns are best in class, and it's fueling our unit growth. And so we feel really good about the asset type and how we're deploying the brand.
Michael, lastly, of course, you're the new CEO of Wingstop. What do we need to know about you? What's your favorite wing?
My favorite wing is original hot, bone in, right down the middle.
Fair enough. I will say this. I'm a lemon pepper guy. We'll leave it there. Michael Skipworth, new Wingstop president and CEO. We'll talk to you soon.